Two 3D players print up a merger, and a U.S. criminal probe shoots down the IBEX deal. Investor Beat starts now. Thanks for watching. I'm Rex Moore, sitting in for Chris Hill. Well, the market saw continued volatility today as those crazy traders are still worried about the Fed signals it might ease back on its bond buying program that's helped the economy recover. Joining me in studio today, Matt Koppenheffer and Jason Moser. And guys, that is our top story today. Bernanke and the Federal Reserve are really signaling to us that the economy is indeed getting stronger and stronger, but in this sort of bizarro world, the market has been selling off. So Matt, can you explain that?
Well, you know, the funny thing is I didn't even realize that there was a stock rout going on. Obviously, today the stocks are down big, but when I look back to the high point in late May, we're down right around 4%, which really isn't all that big of a drop. Year over year, we're still up about 18%. So I'm not ready to call it a rout quite yet. And when I think about what the Fed is saying, when we're thinking about them tailing off their accommodation programs, this is really about them thinking that the economy is stronger, and I have trouble being too concerned about a stronger economy.
Yeah, I'm with you on that one. But Jason, anytime there's a little sell-off, I know you go bargain hunting.
I do, yeah. I actually love it when the market's getting hammered. And I mean, it's not because I like to watch my stocks pull back, but because I'm a net buyer of stocks. I'm always looking to buy more. And so for conditions like these, yeah, Matt's exactly right. These are short-term concerns. And really, how can you get worked up about the economy healing, right? But when I look for companies that can stand sort of all of this sort of volatility, something that comes to mind is UPS, for example. I mean, Big Brown is the biggest shipper out there. Just a tremendous business, tremendous barriers to entry in this line of work. And, when we look at e-commerce and where that's headed over the coming decade, UPS is definitely going to be a company that will benefit, and they pay a dividend to boot. So that's certainly one we're looking at on days like today.
Okay. So, Matt, what do you think about this?
Well, I'd love to see the market fall a little bit more, and I'm kind of on the same page as Jason. I don't want to be looked at as a downer here, but I want to see some cheaper stocks. And one that's on my radar that I'd always love to get at a cheaper price is Visa. Great business model, great performance over time. It's always a little bit expensive because it's such a great company, but if the market does continue to pull back, that's one that I could be looking at.
Okay, let's get to some of the day's movers and shakers. Bad news for IBEX shareholders is the insurance software company is the subject of a criminal probe for intentional misconduct. As a result, its merger agreement with Goldman Sachs is off, and the stock, Jason, down huge today. What is your take on this?
You said a lot of bad words there, Rex. I mean, there's a reason why the stock's down. I mean, Goldman just said, see ya. They don't want anything to do with it. I mean, there are some really big problems here that IBEX is facing, and anything that proves out, and when you have financial misconduct, fraud, anything like that, investors need to run for cover, and that's what's happening today. Anybody thinking about IBEX as a potential investment, I advise you to stay away and look elsewhere.
Stay there, okay. The two big names in the 3D printing industry announced a merger today as Stratasys is buying MakerBot for $403 million in stock. Matt, quite a deal. What do you think?
It is. What I loved is what MakerBot's CEO said about the deal. He said it's like a peanut and chocolate story. They're better together. I thought that was a great way to put it. Like you said, it's a $400 million deal. There's a potential for $200 million more in payouts for this. If you look at what MakerBot's brought in revenue over the past year, this looks like a pretty expensive deal, but if you look at what they're expected to bring in this year, it looks, I'll say, reasonable based on what these other 3D printers have been trading at on the public markets. I think if you believe in the 3D printing story and you like Stratasys, I think this is a good deal because this gives Stratasys an entry point into a lower price point in the 3D printing market.
And Kroger reported earnings that were up about 10% and raised guidance for the year. But Jason, this didn't appear to impress investors today. Is this part of just the general malaise that's going on today or something more specific?
I think I just lost my train of thought after Matt there. I got a hankering for some Reese's peanut butter cups. So Kroger, this is a stock that I've been watching when earnings were coming out. And, I like the company, I like the business. The problem, though, is they are facing tremendous competition from bigger players in this industry like Walmart and Target, which are opening their stores up to more grocery shoppers. And then when you look at something like a Whole Foods and what that's doing to kind of redefine that grocery space in organics and naturals, I mean, Kroger runs on these 1.5% net margins as it is. So I said it the other day, there's nothing they could say to really make me interested in the stock, and I stand by that.
And finally, Kinross Gold Corporation was down 8% or more this afternoon. And Matt, I didn't see a lot of news for this one, so what's going on with gold?
So we're seeing the economy recover. The Fed's starting to see the economy recover. The problem is that that's bad news for gold because investors were fleeing to gold as a safe haven. Since the end of last year, the price for gold is down close to 30%. So for a gold producer, that's really bad news because although production costs have been coming down, they're not coming down that fast, and when the price of gold is falling that fast, that really crunches the amount of profit that they can take home.
Okay, that is all for Thursday. Matt, what is one stock on your radar for tomorrow?
So CarMax is set to report earnings tomorrow. This is a stock that ends up on my radar from time to time because it is the second largest holding for Markel. Markel is an insurer. The investor behind Markel, Tom Gaynor, one of the best investors out there, modeled after Berkshire Hathaway. We've seen great stock performance from CarMax over the past year. I think it's up close to about 70%. What I'll be looking for in tomorrow's report is performance that justifies the higher multiples that CarMax's stock is now trading at.
Okay, Jason, what's on your radar?
Yeah, we were talking about the stock of the day earlier with Facebook, and they just came out with their new Instagram video product. I tell you what, Rex, the problem I have with this product is it's a 15-second video here. Now look at this, for example. Count to 6 for me here. Okay, 1, 2, 3, 4, 5, 6. Right? Who's that killing? 6 seconds, but 15 seconds, I think that's way too long. Now, we said before, this is a reach for more engagement and more advertising revenues. And we're going to see how that plays out, but Facebook's going to be the one I'm keeping an eye on.
Jason Moser, the Vine expert, Matt Koppenheffer, thanks for joining us. I am Rex Moore. We appreciate you watching today, and we'll see you tomorrow.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal